There's a couple different ways to use them. A lot of traders use them to try and trade in between, buy when it hits the lower band, sell when it hits the higher band. That's one way to use them. Another way
Welcome back, traders and investors. We have John Ramsay on Benzinga's Pre-Market Prep, brought to you by Charles Schwab. John is the Chief Market Policy and Regulatory Officer for the IEX, which has been in the news of late. John, how you doing this morning?
I'm doing great. Thanks very much.
Okay, so spent a little time at the SEC, and then you made the move to the IEX. Can you just tell us about that a little bit, and tell us about the IEX?
Sure. So I've spent a fair amount of time in both, actually in the private sector and also government jobs over time. And most recently, I was the head of the Trading and Markets Division of the SEC. I moved here in about July in July 7th to be precise of this year, really because these guys seemed to me to be the only people that were out there in the private sector that were really making an effort to make positive change in the way that trading is conducted. And I admired what they were doing, and I wanted to be a part of that. So that's basically the reason for the move. And I pretty much topped out with what I was doing at the SEC, so there wasn't much other room to go there. And it's been great. I've been very pleased with the decision.
What are these positive? Tell us a little bit more about how the IEX works. How is it different than some of the other dark pools or exchanges out there?
Sure. So there are a number of things. The first I would mention is that the kind of the ownership of the exchange, the trading platform. We hope to be an exchange, and we're going to be filing to do that. But the ownership of the platform is limited to buy-side firms, private venture firms, employees, et cetera. So there's the broker-dealer community does not have an ownership interest. By the same token, only broker-dealers are able to subscribe to and use the platform. So there's this separation between who owns the platform and who can use it. That creates, avoids the conflicts that we think have created problems with various other kinds of systems. Another thing that's gotten a fair amount of play, both in Flash Boys and elsewhere, is this kind of enforced delay, or what we call POP, which is really just a way of kind of leveling the playing field by negating the advantage that certain what we think of as predatory trading practice firms are able to do in terms of getting advantages based on very small time increments of trading. So that's another thing. We also have a much simplified system of order types. So in comparison to some of the other exchanges where you have dozens of very involved and complicated order types that are really designed to appeal to just a very few market participants, we have few order types, and we have a simplified pricing structure too. So again, in contrast to some of the other exchanges that offer rebates in certain circumstances for some kinds of order types, it's basically the same price on both the buy and the sell side for all the orders that we take in. So we think all of those things really limit conflicts. They provide a lot more transparency. We were the first alternative trading system to voluntarily disclose all of our trading rules in our Form ATS that's filed with the Commission. Much less complicated, more transparent, designed to provide a level playing field so that everybody is basically has the same chance to participate in the market.
So you talked about you'd mentioned you're going to file to become a full-fledged exchange here shortly. So it's just the simpler structure that makes you guys different than the other 12 exchanges, or why not just stay as a dark pool? Why file as an exchange?
Yeah, I think I think people here actually would have preferred to go straight to exchange status, but that's just a really difficult thing to do. It's not a simple or an easy process. So I think this is kind of a route that was sort of open to them. I think ultimately we would like to be able to put a lit quote up in the marketplace. I think people here are committed to transparent markets, and so the exchange model is the natural place to go. As I suggested, I think that I think there are significant problems with the way some of the existing exchanges are operated and some of the conflicts that they have, and so we think our model provides a positive alternative to some of those. We certainly have plenty of exchanges in this country at this point, but we don't have anybody else that's actually providing the alternative that IEX is.
What about the growth in off-exchange trading? What are your thoughts there? Because I've been concerned about that. I've seen from 2009 where we had off-exchange volumes around 16 to 17% of the markets, and now they're approaching 40% here. And obviously you guys are off-exchange, but you're going to eventually maybe be on-exchange here. What are your thoughts why so much volume seems to be migrating off-exchange and going dark?
Well, I think there is a concern with it too. When I was at the commission, I had expressed some of those concerns. I think that the reason it exists is that the current market structure gives incentives for people to play arbitrage games between a lot of different platforms, and so there are advantages to certain people to being able to have that many different platforms to choose from, but it's not, not necessarily healthy from the standpoint of the broader marketplace. To be clear, there's perfectly legitimate reasons to engage in off-exchange trading, and it's important to have platforms that provide an alternative, especially for institutional investors, to be able to try to execute trades in relatively large size with relatively limited market impact, and we've had an awful lot of success in catering to that community and being able to serve the function that these kinds of sort of so-called dark pool platforms were originally designed to be. But what you have now is you've got over 40 different alternative platforms that are most of which are, the average trade size is less than they are on the exchanges. So they've morphed into something very different from what they were originally intended to be. So to get back to your original question, I do think that it's important to keep our eyes on how much trading is happening in the dark, and to have kind of appropriate incentives to have a certain amount of trading take place on the exchanges.
Yeah, because the one problem that I always cite is the dark quote is typically reliant on the lit quote to get their information. People are usually trading their dark quotes off the lit quote. So if all of a sudden the majority of your quotation, or if all of a sudden your trading is all dark, there's going to be less quotes, and then that could eventually impair price discovery.
Yeah, no, absolutely. Couldn't agree with you more. I think that there is, at some point, you do run a risk of, kind of the tail wagging the dog. Now, you don't have to have, you can still have a fair amount of trading take place in the dark and have the lit quote serve as a useful proxy, but there comes a point where you would become concerned about exactly the phenomena you're talking about.
Let's go back to the IEX exchange. I just want to dive into a little more of the details there, where you were talking earlier about how you guys slow down some of the orders to actually take away these high frequency trading advantages, and that was what was kind of conveyed in the Michael Lewis book, is that when you send an order, it gets to one exchange before it gets to the other exchange, and once it hits that first exchange, those high frequency traders that are on that quote realize, oh, there's somebody coming in here, I better cancel the rest of my quote. So when you go to lift this big offer, you'd find that you'd only get a piece of the offer, and you guys actually slow down the quote so that the institutions trying to lift the offer can get the whole thing, correct?
Right, exactly. So it's, in essence, it's basically a way of using technology to be able to counter technological advances that, favor some participants. So what specifically we do is, for every order that comes in, there is a what we call point of presence, or POP, which creates a 350 microsecond delay. Now, it's a very, very short period of time, but it's just enough so that what we think of as predatory trading firms that are sending orders into the market can't gain that kind of advantage, because all of the orders are pretty much arriving at the same time to the marketplace. So, and at the same time, we subscribe to all of the fastest proprietary data feeds from all of the other markets. So our own reflection of what the market is at any point in time is as up-to-date and fast as it can be. So we try to have the best, most up-to-date understanding of where market prices are, and then incoming orders from any participants, whoever they are all arriving at about the same point in time, so nobody gets a particular advantage in being able to react to those market prices or changes.
John, some industry professionals are concerned about the IEX price broker time model, better known as broker preferencing, and this is common over there in Canada, but not in the U.S. markets. Can you briefly discuss broker preferencing and why the IEX uses this?
Sure, I'm glad to. So I guess the first point I would make is that when you think about broker, it has been true in this country for a very long time that we've had sort of a system of broker preferencing, which just basically means that large firms, sell-side firms, are going to cross orders internally if they can, because they get, the economics are better for them to do that when they can, rather than sending things to an exchange or to some other kind of platform. What we do on our platform is we give an incentive for incoming orders to be able, from a particular firm, to be able to interact with trading interest, other orders from the same firm, so that if you got a series of orders on our order book, all of which are at the best price, an incoming order from one firm will be able to sort of jump the queue, if you will. It's basically a way of allowing firms to internalize a certain portion of their order flow in an environment that is less conflicted, and ultimately will be more transparent when we have exchange status. As it is, there's a very small percentage of trading that happens in our exchange that occurs because of that. So it's not it's not a huge amount, but the point is to try to provide an incentive for firms who are going to internalize order flow anyway to be able to do it in a more transparent way that is subject to a set of rules that create a higher level of confidence in the system.
And John, when did you guys originally start the IEX? When did you commence trading?
Well, so I was relatively late to the game. I think they launched the platform. These guys, this started really from this group of folks, Brad Katsuyama at Royal Bank of Canada here, and some of his colleagues who launched an investigation into why they were having trouble accessing prices on exchanges, why trading was becoming much more difficult, and then as a result of that investigation decided they weren't just going to complain about it, they were actually going to offer a better alternative way to trade. And then they gathered a lot of other very smart people from other firms, both traders and technology people, in order to launch this venture. I think it started just about a year ago was when, October 25th. So we're almost at the 1-year anniversary, and we have been steadily growing in volume since then. Just the other day, we did 175 million shares. Probably the fastest increase in volume and startup for any alternative trading platform that's happened. So we're getting a lot of good traction. We are, there's still a long way to go. We are, just in the beginning stages of discussing the exchange application process with the SEC, but we hope to have that done next year. So we feel good about the future.
And do you have a minimum trade size to go through your exchange? Is it 1,000, 5,000, 10,000, or is pretty much any order acceptable?
We don't have a minimum size. We think we provide functionality that provides advantages for all kinds of orders, but we also think that we provide an ability for institutions to be able to trade in size as well without a lot of market impact. And the experience is that when people are able to rest significant size orders for some period of time, there are countless great examples of being able to do a lot better than people have been able to do on other platforms. So again, we think we've been able to provide an alternative that actually does the things that these kinds of trading platforms were designed to do to begin with. And then, we think a lot of the advantages that we provide can extend to the retail broker community as well. And certainly when we become an exchange, also we expect to be able to grow the group of constituents who can benefit from our platform. We don't pose many conditions on who can come in or what kinds of orders they can send, other than you can't trade in a way that, from our perspective, gives an unfair advantage over ordinary investors.
John, we're almost out of time here, but I just want to ask you before we end the interview. Regulators, they have a really tough job. They have limited resources. We know there's some issues in this market structure. Where should they focus their efforts, though? Where do you think the major issues are here in the market structure?
So, having been in that seat not too long ago myself, I have sympathy for the position that my former colleagues are in. There is an awful lot of stuff that they have on their plate to deal with. I think in this area, in terms of the equity market structure questions, where they really need to focus, and where I think they are focusing, is on creating a lot more transparency around how orders are handled, giving a lot better information to investors about how different trading platforms are performing, in a way that where investors can compare performance across different platforms, and basically giving tools to investors to be able to make smart choices in terms of how their orders are going to be handled, and also, frankly, to be able to kind of hold their brokers' feet to the fire in terms of making sure that they're accountable for how they're doing that. And I think there are some other changes that could be considered around the edges. But I think the good news is that whatever issues there are in the current system, they don't require a lot of wholesale reform of the system. I think IEX is a clear example of the fact that the private sector can create solutions that really make a big difference. And so I think that's where they're focused, and I hope so.
Okay, John Ramsay, Chief Market Policy and Regulatory Officer at the IEX Exchange. John, thanks for coming on and talking about your exchange. We wish the best of luck to you, and hope to have you on again soon.
Thanks, guys. I appreciate it. I enjoyed it.
Okay.
Thanks, John.